Hello and welcome. It's yet another episode of Africa Business Weekly. I'm Akin Obakeye. Now, from the Africa Day celebration to the annual meetings of the Africa Development Bank, this week's journey will cut through major business stories across sub-Saharan Africa. But let's start the show from Southern Africa. Palesa, take us through what you have today.
This year marks the 60th anniversary of Africa Day, an annual celebration of the achievements and potential of the African continent. The African Union's theme for this year's celebration is accelerating the implementation of the African Continental Free Trade Area and deepening the economic integration of the continent. For more, my colleague Godfrey Mutiza caught up with Albert Muchanga, the Commissioner of the African Union. Let's watch.
On investment, our colleagues in Accra, Ghana, they've come up with the investment protocol. We started working on that protocol at the African Union, but we transferred it to them to be part of the protocols there. It's going to promote harmonization so that there are common rules and regulations regarding investment, so that if one invests in a country X, and they wanted to expand it to the next country, they don't face any obstacles. It's a common integrated investment environment. 100%. That is very, 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 very important. And it comes also back to the issue of dialogue. We needed to have that dialogue. Now, before I come to answer your question, in the investment community, one which emerges is that it is always the locals who determine the environment, whether it is conducive or not conducive. When you see Africans with a lot of money, high-income individuals start externalizing, you are in trouble.
True.
Because the multinational corporations are going to take the example of what the locals are doing, to take the money out of the country. And hence the importance of dialogue. If they have any problems, let them talk to us to say, what are the issues that we need to deal with? Now, logistics is a huge challenge.
Sure.
It's a huge challenge. Most of the shipping facilities go to Europe.
Yes.
If we want to export a product from the southern part of Africa to the northern part of Africa, the ship will first go to Europe and come back.
Absolutely.
To that. Now, we are working with the African Export-Import Bank to see if we can have an integrated shipping and logistics system around Africa.
How far is that, Commissioner?
Because I tell you what, level of a feasibility study.
I remember speaking to, I think it was Professor Mtuli Ngube when he was still at the African Development Bank, and he was talking about the fact that when you look at Africa's logistics systems, when you look at the railways, they were designed to take stuff out of the continent.
That's true.
And wait, we haven't done anything about that.
No, I have not reported, man. I just had a bilateral meeting with the president of the African Export-Import Bank. I said, we need to really, Professor Oram, we need to rededicate efforts to come up with an integrated shipping and logistics system across Africa, so that within Africa we have distribution hubs.
100%.
The goods can move to the people on a regular basis.
How far is that plan, though, Commissioner?
They are going to finalize the study by the end of this year.
Okay.
Then we also come up with a shipping network where ships can move around Africa and across Africa. So when we have that, I think we are on our way towards coming up with an integrated market.
Before I let you go, I wanted to ask you if you could share with us what's on your in-tray in terms of key important messages, important work that you are carrying out from the AU level.
Yes. Well, one of the key issues is that we are aware of the importance of the meaning of African unity.
Sure.
In economic terms, it means economic integration.
Yes.
And the blueprint for that is the Abuja Treaty, the treaty establishing the African Economic Community. On the basis of that, what we are working on is a readiness assessment towards the African Customs Union.
Okay.
That readiness assessment is going to go to the ministers responsible for finance, monetary affairs, economic planning, and integration in July this year. They are meeting in Nairobi, Kenya. That is the first activity. The second one is to come up with a study, coming up with the key drivers of inclusive growth and sustainable development across Africa.
The Angolan economy is forecasting economic growth of 3% in 2023, following the acceleration of Angola's non-oil sector. For more on the country's attempts to bolster foreign direct investment, we spoke to the new chairman of the Special Economic Zone of Luanda-Bengo, Manuel Francisco Pedro. Let's listen in.
Thank you so much. In fact, that's true. Right now, what we are doing is to create the appropriate framework to attract the investment, the private investment. Right now, what we are doing is to create the appropriate infrastructure. Also, what we are doing is to create the appropriate framework, legal framework, just in order to have a friendly framework to attract the investment, the private investment. And also we have, I have to mention that we have a very good political stability also. We also have a macroeconomic stability, and I think that the private sector have all the way to grow.
Okay, and in terms of the private sector, what are some of the opportunities that the government is keen on attracting?
Okay, in this regard, I'll say that we have a framework which is friendly. What I can say is that we have a framework, a legal framework, an incentive fiscal incentive to attract more investment. I'm talking about some in the fiscal side, in the customer side. We have also a new law to attract the private investment, which now in Angola, to invest in Angola, you don't need to have a partner in Angola. So it means that the investors can go to Angola, can come to Angola, and they don't have to find a partner to build up a company or a factory. What also we have also an appropriate financial system that allow the investor to transfer all the money when they want to transfer to their country. And I think that we have all the conditions. Our government is also improve our infrastructure in terms of electricity, in terms of water. I'll say that in this moment, Angola have the lowest energy price in the region, and also the lowest water price in the region. And I think that all those issues help us to attract more investment.
And speaking of that, I'd like to get a sense also of what Z, the Special Economic Zone, is offering in particular in the context of this.
Okay, right now the Z is the largest industrial hub in Angola. And there in the Z you find the appropriate infrastructure. Also in the Z we have a place which we call the Gabinete de Apoio Investidor. Is the one-stop shop, is the place that the investor, when goes to the Z, you don't have to go to another place to take care of the issue regarding to the business, to the company, to pay taxes, to pay electricity, to pay water. I'm saying that we have a space that we have combined all the public service and other service just to allow all our investors to have in one place all the service that they need.
That's it from the Southern African team. It's back to you.
Thanks, Melissa. We now move over to East Africa, where Sarah is standing by to take us through some stories that shaped headlines in East Africa this week.
Thank you so much, Akin. Quite a lot is happening here. First, we look at the ongoing efforts to fund Rwanda's private sector. Over $200 million is available for private sector funding in Rwanda from African Development Bank. According to the bank, these funds sit idly in its coffers untapped for many years. AFDB country manager for Rwanda, Isa Ture, spoke to CNBC Africa for more.
without even climate change, is boosting infrastructure, right? The bank has a portfolio of $1.5 billion in Rwanda as we speak, and 87% of that goes to water, sanitation, infrastructure, in energy and transport. And these are key sectors when it comes to climate change, where we need to climate-proof those investments to be able to make them sustainable and long-lasting, so that there is a better return on investment. And in those sectors, Rwanda also wants to mainstream, as the bank, climate change in all those infrastructure in terms of financing. So we are considering having some climate finance, the new climate action window, to be able to add the climate lend to those infrastructures. So Rwanda is really at the forefront. They have many of the instruments themselves, and climate mainstreaming, adaptation and mitigation is part of the global picture when it comes to sustainability of infrastructure.
Yeah, because I was going to get to that point, talking about where the focus is skewed. Is it skewed more towards mitigation or adaptation?
It's on adaptation. For the continent, adaptation, makes the majority, should make the majority of investments, because we need to adapt. Mitigation also is key, but priority, the financing, the technology should go to adaptation. And this is also reflected in the green climate strategy of Rwanda.
Yeah, but mobilizing private capital can be tricky at times, and I would like to get your feedback from the private sector in Rwanda, what their thoughts are around the risks in going into climate financing.
I think in general, the private sector in Rwanda is keen to invest in green economies. For instance, the circular economy is very prominent and popular, but these are small schemes, right? And when it comes to impactful investment, the country is yet to really focus on it. But we are making some positive moves in that direction. Recently, we are funded, the African Development Bank is funding an e-mobility project of 100 million, where the government is borrowing 100 million to be able to build infrastructure so that the private sector can come and buy e-mobility and e-buses. And the same goes to water. There is a big PPP that the bank has financed in the water sector for 20 million. So I think it boils down to awareness raising for the private sector to know that the bank is in funds, has investment in the private sector, which is not always the case. Private sector believes, and in many African countries, that we are more a public financing institutions. Yet we have massive money in private sector. It's a matter of raising awareness on the product that we have, the terms, and the different segments of the markets that can benefit from those investment and finance.
Yeah, because when you look at the private sector funding available to the continent here, we see a large skew towards 5 main countries: South Africa, Nigeria, Egypt, Morocco, and even Kenya. And I'm trying to imagine what you are trying to do in Rwanda to attract a lot more of this funding to solve your challenges.
But you will be surprised, the fundings are there. This year only, in 2023, the bank has provided an envelope of 242 million to Rwanda for 1 year for the private sector.
Still in Rwanda, about $1.6 billion worth of investments was attracted in 2022, which is a 26% increase compared to the 2020 levels. The country has invested heavily in sports infrastructure, my sector, and this is to mention just a few, with the aim to boost tourism revenues to $800 million by 2025. We spoke to Claire Akamanzi on ways the country plans to attract investments in the tourism sector.
Maximize potential that Rwandans have, or even people living in Rwanda. What we're doing as the government of Rwanda is maybe at 3 levels. One of them is to really bring opportunities to train and skill in specific things. We've attracted a number of universities here. Africa Leadership University is one of them, CMU, Kepler, Aquila for even very specific skills. We are negotiating with a number of opportunities today to come and set up in Rwanda. So I think always bringing platforms where skills can be passed on has been one of the key things. The second one is really bringing opportunities where skills can be displayed. We have a number of partnerships that we have today that brings opportunities for Rwanda, and that helps with skills development. Let's talk about sports, for example. We have been focusing on sports tourism for a couple of years now. The government invested in infrastructure like the Kigali Arena. We are revamping the Kigali Golf Course. We have the Amahoro Stadium for football. So infrastructure and facilities is one. But also bringing events to Rwanda helps to develop skills. If you look at what BAL is bringing, yes, there's a number of skills they still have to import, but the number of opportunities that they're giving Rwandans as well to supply skills and services. But by exposing them to those kinds of opportunities, they can actually enhance their own skills. We've negotiated deals, for example, to bring Trace to the country in the creative industry. We will be announcing some more deals sometime this year. Maybe it's a little bit too early to do that, where we're bringing events that are known globally to come and set up in Rwanda. They bring their creative, very, very high skills to the country. They bring opportunities for investors to supply to them, whether it's equipment, sound engineers, or any other creative content development, digital development. All these are opportunities for young people to enhance their skills by supplying to these events. So that is the second thing that we do. Apart from bringing the skills training, we also bring events and opportunities where they can apply practically in order to be able to really enhance the skills and use them in a way that they don't have to. And we've seen that work in other sectors. If you look at the banking sector in Rwanda, when we started privatizing the banks or attracting new banks, almost every CEO of a bank in Rwanda was foreign because we didn't have the skills, which was fine, and we really encouraged that at the time. But today, there are probably less than 20% of CEOs that are non-Rwandan. Many of them are Rwandans because the skills have been developed over time. So what we understand as government is bring the opportunity, give the opportunity, and skills will be grown even much better because the skills have been exposed to opportunities that come to the country.
Yes, you've touched creating the opportunities, bringing in the opportunities, putting in place the right infrastructure. You mentioned the investments that has been going well within the sports infrastructure. We've seen this week alone what BAL is doing here in Kigali, the excitement from across the continent. How much are we reaping from the investments that have been put in place in sports?
Well, today sports contributes about 15% of MICE, and MICE is one of the fastest growing segments of tourism. So it's really growing. It's 15%. MICE itself is about 13% of total tourism. So we can see that that's going to grow over time. And sports is something that we only invested recently. But events in general, when I was looking at the numbers of FIFA, hosting FIFA in Rwanda, injected almost $10 million to the economy of Rwanda, which is significant. We shall know what BAL will inject to the economy of the country, but not only does it bring economic impact in terms of hotels and restaurants benefiting from events, organizers benefiting from the events, but also skills and standards that are really going to be enhanced. I think that's really important. So the economic impact is there, and we hope that sports tourism is going to grow for 15%. The potential we see is even maybe 50% of MICE.
That's it coming from the East African team this week. It's back to you, Akin.
Thanks a lot, Sarah. Now, in West Africa, we focus on how Nigeria's naira scarcity impeded growth in the first quarter of this year. Now, data by Nigeria's National Bureau of Statistics shows an economic slowdown of 2.3%, hinging on the cash crunch caused by the naira redesign policy of the Central Bank of Nigeria. Now, Tilewa Adebajo, CEO of CFG Advisory, talks us through the level of impact and the way forward.
There's nothing new here. What we have just seen is the impact of the cash crunch, the withdrawal of cash in the system. Nigeria is a dual economy, and the idiosyncrasies of the dual economy is such that the informal sector contributes about 50% of our GDP and has over 20 million SMEs. And these sectors are driven primarily by cash. And at a point in time, they had 3.29 trillion naira worth of cash out of circulation in the banks, out of which the central bank withdrew 2.3 trillion, and they only left about 986 billion, which was just under a trillion. So the impact of that is what we're seeing in the drop in GDP growth. So it shows us how significant the informal sector is, and the fact that our financial inclusion in trying to reach the informal sector with electronic banking, we still have a way to go. So we can see the direct impact of that. I was actually surprised. I thought it was going to be worse. So that is what we're seeing in the GDP growth. The impact of that is it's direct.
Do you think that the CBN, because I'm just wondering, was that something they expected to happen, or would they say this was an unintended consequence of that policy? We know why they had, why that policy came out, to drive a cashless policy, to get more people to, go cashless, etc. But I'm not sure that, that aim was achieved, because we know that more money, has come back out into the system. Yes,
at the time they started this, we had 3.29 trillion in circulation, and the irony of that was that the multiplier effect of the money multiplier was about 600 times. So that 3.2 trillion was turned over about 600 times a day. So it's quite significant. So you drop that to 986 billion, but as of today, as of last month, it has come up to 1.6 trillion. So the money in circulation now is not at the level of 3.2 trillion, but just at 1.6. So we'll see what that impact will have on second quarter GDP.
Now, for the rest of the numbers, I'm looking at all sector contracting 4.2%, the agriculture sector contracting 0.9%. I mean, this is a sector, the agriculture sector, obviously in the forefront of the outgoing administration in terms of boosting growth across the country. We know about the border closure, etc. But what do the other numbers tell you in terms of the strength of the economy, and perhaps direction in terms of how much can the economy grow this year?
Well, it's going to be very difficult, first of all, because those numbers also reflect the fact that agriculture is significantly cash-driven, because it's one of the key drivers in the informal sector. So you can see the impact of the cash withdrawal in that agricultural sector. So that is the cause and effect that you're seeing. But overall, we haven't really put in the stimulus for growth in Nigeria's economy. The challenge we have in our economy is that stagflation is getting deeper. Inflation is getting out of control. So the classic issues of stagflation, runaway inflation, high unemployment, weak growth are what we're experiencing in Nigeria. And you can see that despite the fact that you've seen 7 consecutive increases in the NPR rates, we haven't really seen an effect on the decline in inflation. So you're seeing food inflation is also on the increase, and the ways and means is also impacting inflation. So you're finding a situation whereby even if you look at the basket of inflation, the goods, some people are saying that inflation is even closer to 30%.
Moving on, the African Development Bank forecast Africa's GDP will grow by 4% this year and rebound at 4.3% in 2024, underpinning the continent's continued resilience to shocks. Now, Kevin Nurama, Chief Economist of the African Development Bank, lists policies needed to sustain the outlook. Take a listen.
As you heard from the presentation, Africa's economy has continued to show remarkable resilience. Despite all the confluence of challenges that we've seen, we have COVID, and then the aftermath of the recovery from COVID is still there, lingering. And then we have the Russia's war in Ukraine, which also has created a lot of spillover effects in energy prices, in consumer price inflation for food and other materials that are imported from those countries. And also you have the other challenges around the global conflicts that has continued to happen. And more importantly, to the subject of this meeting, the losses and damages that countries continue to suffer from climate change impacts. So this has created a confluence of factors that has exacerbated challenges with regard to debt and debt sustainability, which I will come to. But even within all these challenges, the African economy is projected to slow from 4.8 that we projected in 2021 to 3.8 in 2022. But then 3.8% growth in GDP in 2022. But our projection is that it will rebound to 4% at the end of this year and up to 4.4%, 4.3% by 2024. And this projection of 3.8 in 2022 is much higher than the 3.4 average growth we see globally. And then when you look into the macroeconomic fundamentals on this continent, you see that things are going in the right direction. Fiscal deficits are narrowing. Current account deficits might expand a little, but it's not too much compared to what you see in other regions. And then also you find that the continent continues to remain on a positive trajectory of growth even across the regions. If you look at all the countries on the continent, you find that 5 out of the fastest growing countries in Africa will rejoin the league of the 10 fastest growing countries in the world. So this is just Africa claiming 5 seats amongst the 10 fastest growing countries in the world. That's very phenomenal, because the projections during COVID and all these crises was that Africa was not going to be able to shoulder, to absorb those risks and continue to move forward. And this is because of a lot of macroeconomic policy reforms that has been implemented by our leaders. And it's important here to commend them for the great work that's been done in the past decade. We are seeing a very good positive direction.
Yeah, because we're seeing that the outlook is more or less mirroring what the theme of the annual meetings is, and in terms of the topic here, we're trying to crowd in private sector finance to address key issues regarding climate and the green growth on the economy. And I would like to get the banks thinking in that regard, because this is a very crucial point. A lot of perception with regard to risk here. Speaking to quite a number of the governors from other countries outside the continent, they mentioned that when speaking to private investors or people who have access to huge capital institutional investors, that the perception has been one of the areas there. But listening to your presentation yesterday, I was quite taken aback as well, because you kind of put it into context about how the continent is not as risky as perceived.
Yeah. Now, the theme of the meeting, of the annual meeting, as you rightly said, is on mobilizing private sector financing for climate and green growth in Africa. Now, we chose this theme purposefully because we've had series of discussions on climate negotiations, and the focus has been on public sector financing. And you and I know, based on the interviews we've had before, that even the 100 billion that was promised by developed countries is not really flowing that much. And then even when it does flow, in terms of the financial flows onto the continent, the climate vulnerable countries are not getting as much because of the internal structures of their economies that actually prevent the money from coming to those investments coming into these countries because of perceptions of risks, but other issues like capacity to prepare bankable projects. There are several things that you and I have gone over before.
Well, this brings us to the end of Africa Business Weekly for this week. A big thanks to Palesa and Sarah for the regional updates. I'm Akio Bakeye, and we'll be back same time next week for more weekly business stories across sub-Saharan Africa. Thanks for watching.